Hello, everyone. Welcome to the MBA with an MBA. I'm your host, Chris Bostic, and today I want to talk to you about credit. So the breakdown of it is your payment history accounts for 35% of your credit score. Amounts owed will count for 30% of your credit score. Length of credit history will account for 15% of your credit score. The types of credit that you have will account for 10%. And then the last 10% is new credit or inquiries. So the last 10%. So with those five different things, payment history is the biggest. So collections will hurt you the most. But as time goes on, they impact you less and less. They will stay on your credit report for about 7 years. But make sure when you have one, that you report any inaccuracies that you might see on the report. So it's good to check your credit often just to make sure everything is correct. And just the history itself will impact you the most. Now, amounts owed is another big thing. So that impacts your ratio. So if you're maxed out, that'll hurt you a lot. Excuse me. With the amounts owed, you want to keep your balances under 30% if they're revolving. So revolving is anything like credit cards, or unsecured or secured. Installment loans like mortgages and cars, that doesn't impact you too much because they're installments, so you have a set payment every month. So it's good to have those because that helps with your types of credit going into that as well. So you want to have a mix of your revolving along with your installments. And then your length of credit history. One little hack is to become an authorized user on someone that you like and trust. So the catch 22 with that is if they miss a payment, then you're accountable for it as well. So that'll show up on your report. So make sure it's someone you know that is very good with their credit if you do choose to do that to increase your history. And then lastly is new credit. So the thing with that is you don't want to apply for too many things at once because that'll actually hurt your score. It's one of the least impactful things, but it still can hurt you as well. And one thing with that too, to I guess a little hack as well is with your amounts owed. If you increase your limits, that will count as an inquiry when you do that. So just a heads up there. Now with the scores, they range anywhere from 350 to 850. So anything under a 580, you want to get that at least up to there because you won't qualify for a home if you're anything under a 580. So you want to make sure you're at least there. With that, you will get higher rates though because you're deemed as a little bit more of a higher risk based on your credit score. So it's important to know that. The next kind of score level with mortgages is 620. That's when you can start applying for FHA, which is a first-time homebuyer program. It stands for Fair Housing Administration, and that's where you get the down payment assistance programs as well. But same thing, they still will charge you a little bit higher rate doing that. The next kind of benchmark is it ranges from 660 to 680, depending on how stringent they're holding the purse strings at the lenders. I would shoot for 680 just to be on the safe side. And that's where you start getting more reasonable rates. 720 is the next tier. That's where you're deemed very good and you get better rates. And then 760, kind of the joke is you probably fund a war based on your credit score there. Anything above 760, it doesn't make too much of a difference. We see very rarely 800 scores because one other thing with credit scores is that there's various models out there. You have your three bureaus, which is Equifax, Experian, and TransUnion. So you do have all three of those, but they also have different models within them as well. If you're applying for a credit card versus a mortgage, versus a car, versus just a regular kind of secured loan or a money loan. So just a heads up with those different things there as far as credit goes. Feel free to hit the comments if you had any other questions, and I look forward to catching you on the next episode. Catch you soon. Thanks so much. Bye bye.